Welcome back to the closing bell. Less than 90 seconds to wrap up the trading week. It'll be a record setter, more or less, no matter what happens at this point. I'd knock on wood to say that, but again, a rally today, even in the face of not terribly impressive news.
No, well, look,
GDP
knocked us down. The upside surprise in consumer sentiment picked us back up. It's still an earnings-driven market right now, and the earnings have been very good. I think, I had a number here. 61% have reported, 68% of those have come in above expectations. So earnings, by and large, even though expectations were incredibly low, have been good. Let me point out something real quickly, because I've been watching it throughout the day, which I think is fairly interesting. Yes, we're up today. We're up 17 1/3 points, but down volume is way ahead of up volume today. What does that tell you? Well, maybe it's not that great of a gain. You only have five or so stocks on the Dow Jones Industrial Average today that are accounting for the entire gain totoday. So it's not that deep in terms of the breadth of the market.
There's been a number of technicians that have been pointing to that type of data, whether it's the advanced decline line or whatever it may be. With that said, the 17-point advance right now in the Dow will give you yet another record, 13,122. Will get you done for the week. The NASDAQ good for 3. The bell rings here and continues on CNBC right now with Maria Bartiromo.
Hi, everybody. An historic week on Wall Street coming to a close with another record close for the blue chips. Earnings continue to overshadow mixed economic data and push the Dow into uncharted territory. The Dow began the session on the weak side today, but powered ahead in the last hour, certainly, of trading, a trend that has been the case all week. Well, the gavel came down today, and the close out the week with a record-setting ways. The blue chips cracked 13,000 this week, and it, along with several other indices, closed at all-time new highs. All three major indexes, meanwhile, were higher for 4 weeks in a row. Better than expected earnings, really setting the tone for investors. Powering the Dow Industrials today, a big move in General Electric, 3M, Microsoft, and Honeywell. Investors watching the broader S&P 500 index as well. That is just a couple of points away from the key 1,500 level, a level it has not closed out since September of 2000. Check out the NASDAQ. It was higher as well, even though just barely at 2557 on this Friday. We have all the market action covered. CNBC's Scott Wapner is down on Wall Street with Dylan Radigan, along with CNBC's Steve Leishman and strategists David Winters and Howard Silverblatt. We begin with Scott and Dylan.
Yeah, one thing I want to point out, which we didn't talk to at the end of the last show, is oil prices. Up again today. I had a trader who's been down here a long time come to me and say, if oil closes at this level where it did, we could be in trouble next week. So, we're going to get more earnings, and that's going to be certainly important, but you got to watch oil.
Yeah, and the theme this week had to be durability and resilience and breadth. It wasn't just one sector that got what will be a historic week this week done. It was the drugs and money story last week. Pharmaceuticals and financials finally showed up. The home builders, even the automakers, put in significant up days this week. There are many people that greet those up days with skepticism, but they did deliver those days, and then the currency benefit to the multinationals. You add it all up, along with the better than expected earnings, which fueled underneath it, and you get the numbers that we put on the board.
Yeah, home builders, I think they were up 3% or so yesterday. All in all, a good week. Down a little bit today. Obviously the GDP report kind of reaffirmed the shakiness of the housing sector going on. Watch for earnings next week. It's going to be important.
Well, I'm going to listen to what you have to say so I know what to watch for.
Well, I'm going to tell you right now. Let's wrap up today first, because certainly the GDP report that came out this morning, that was a blow, but the upside surprise in consumer sentiment, that picked us right back up. But as I said, 5 stocks really on the Dow Jones Industrial Average accounting for all of the gains today. Microsoft, Honeywell, Caterpillar, 3M, and GE. You know the story there. In terms of the transports, we mentioned what was going on in oil prices. It was a very tough day for the transports today. Number one, because of what's happening in oil. Number two, downgrades to the airlines. JP Morgan, they got out the hammer today. They cut 6 of the airlines. As a result, Continental and AMR, the parent of American Airlines, were down. YRC Worldwide from the trucking space, that was down 8%. Their profits were down sharply. J.B. Hunt, another one in that sector, was trading down in sympathy. And then FedEx, of course. Also, talk about some story stocks today. A number of interesting stories going on. Chevron, with what's been going on with gasoline prices, gasoline margins for Chevron, they absolutely crushed their estimates. Cummins, the engine manufacturer, they blew away estimates, increased their guidance. Remember, I've been talking a lot about how good earnings have been, even though the expectations were low. Nortel, meantime, Goldman cut them to a sell from neutral. Burger King, lots of talk this week about casual restaurants from at least the fast food space. Burger King beat on both the top and the bottom lines, and then AT&T, the CEO, leaving earlier than expected. Let's quickly get to Monday. This is the last trading day of the month on Monday. Here's how the major industries have done for the month. The industrials, you know the story, up 6% for the month, broke the 13,000 mark. The transports, good as well. Now we watch for the S&P 500. 1527 is the number we want to try and beat. We haven't been there since 2000. Back to you.
All right, Scott, thanks very much. Meanwhile, one of the biggest stories today in Saudi Arabia, police arrested 172 suspected Islamic militants, some of whom were involved in a plot to fly aircraft into the kingdom's oil facilities. Saudi Arabia is the world's largest oil-producing nation. The news lifted crude prices to their highest levels year-to-date at $66.46 a barrel. CNBC's Bertha Coombs with the latest developments. Bertha?
Maria, that plane issue troubling to a lot of people. The Saudis have been fairly successful at averting major attacks.
Productivity and Friday's April employment report. Of course, today's big economic story was slow growth, with the GDP coming in at an annualized rate of 1.3%. Joining me now to break it all down, tell us what is next, is David Winter, CEO of Wintergreen Advisors, along with Howard Silverblatt, senior index analyst with Standard & Poor's. Our own Steve Leisman, CNBC senior economics reporter, also joining us. Steve, let me kick it off with you. Give me your assessment of the GDP report.
You know, a really bad headline, Maria, but sort of the inside looked a lot better. And the big number that stood out was the 3.8% rise in consumer spending. Capital spending, which people thought was going to be negative, edged out a little bit of a gain at 1.9%. And a big story also was the government spending was 0.9, which really is going to be another point or two higher. So the reasons for the miss, especially when you add in the idea that inventory was lower than expected and might be a build in the second quarter, the reasons for the miss did not make us think much worse of the economy than we already did, and gave some heart to some economists we talked to who said they were sticking with their forecast for the second quarter, about 2.5% growth. So
really
accelerating by about a point.
Really good point. David, how do you invest in this environment? We know that the economy is slowing. We're seeing it in earnings, and we're seeing it on the consumer side. What changes have you made to the portfolio?
We're steady as she goes, Maria, and we like companies that do well no matter what happens. So we like consumer staples, we like cash machines, we like companies like Berkshire Hathaway in the cigarette sector, and no matter what happens, we think our investors will win over time.
So are there groups that you don't want to own in this environment of slowdown?
Banks, I think, are an area of concern because you've got deteriorating credit quality and probably rising rates. And so banks, the airlines are clearly a tough sector. We really want securities and underlying businesses that can do well in good times and tougher times.
Howard, is it interesting, or what do you make of the fact that even though we're looking at this slowdown, the major averages keep climbing this wall of worry?
Well, the depth is good, especially this month. But if you're looking at the Dow, I did this morning, only 13 of the 30 were actually higher than they were in March of 2000. Most issues there obviously have not recovered, so it's not as broad as it first may indicate. About 73% of the overall market is up from that time period, but telecom and especially technology have lagged a lot. But the earnings are pushing a lot in there. The numbers are good in spite of the hype and the fact that we were lowballed on there.
Steve, what are the projections for the end of the year?
In terms of GDP, they're actually climbing, Maria. We talked to several economists today, and they're still sticking with their 2.829. We shouldn't overstate the strength, though. Remember, Maria, after the first quarter now, that's 4 quarters we've been running below potential. This quarter is probably going to be below 3% again. So that's 5 quarters running below potential. I think one of the extraordinary things out there is the ability of companies to continue to profit in this environment, given that their profits are running far ahead of GDP. And if you ask me what the logical forecast was for corporate profits,
right,
it has to be a lower number because they can't continue to gain or gain profit at a rate that's faster than the overall economy is growing.
Yeah, and also, David, you've got economies around the world growing. Are you participating in that? I recognize you're really looking for value in this country, but what about international markets?
Maria, the majority of Wintergreen's assets are overseas, and there are fabulous opportunities around the world. There's tremendous growth and value-creating opportunities. So we're very bullish on the world outside the U.S.
Where specifically, David?
Asia's great. I mean, the money that's being created out there, and there's some wonderful companies out there, Swire Pacific is an example. There's all kinds of opportunities in Europe and Canada. You've got more oil than the Middle East. And so we love Canada as well.
Yeah, it's interesting. Howard, what about that? I mean, you know, the multinationals that have operations around the world seem to have benefited from this strength that we're seeing around the world. Do you expect that to continue throughout the year?
Yes, I do. Continue and expand. That 48.5% of the S&P 500 sales are from abroad, up from about 44% last year. And while we can't get a good handle on the net earnings per share because of the accounting, it would appear that on a pre-tax basis, over half the profits are coming from abroad. So when the dollar goes down, we have this give and take situation. So the growth that's not occurring perhaps in the U.S. and even slowing down is being picked up by a lot of these companies from abroad, especially, as I said, Asia and China. And that's translating into earnings. We're seeing that this quarter.
All right, real interesting stuff, gentlemen. Thanks so much. Have a great weekend, all of you. Thank you for joining us. And a left turn on Wall Street. Why are some of the most high-profile financiers backing Democratic candidates? We'll explain what's behind the switch from red to blue and whether investors need to be concerned when it comes to green. Plus, our day-long look at luxury real estate takes you to the Midwest. We're showcasing what kind of home $1 million can buy you now. And then the slump at the lower end of the housing market has cost Countrywide Financial nearly 10% of its market value in 2007. I'll be talking with the boss, CEO Angelo Mazzillo, my guest, coming up on how his company is weathering the subprime storm and what he's doing to get that stock price out of the basement. Next.
You're watching Closing Bell on CNBC, America's business channel.